All right, everybody. Good morning. Welcome. It's March 11th. All trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation is intended to be informational and educational and not a recommendation to buy or sell any financial instrument. If you desire personal financial advice, consult your financial advisor. In other words, this is all educational in nature. I hope it works. It might not. We might only plan losing trades for the next 4 months. It's possible that I will never plan another winning trade again for the rest of my life. And just remember, there's a ton of risk in trading, and that doesn't change just because you're working with me. In March, these are our goals. We want to plan and take a $9,000 trade. I think we're getting closer to that today. I want to plan and take 2 to 3 small trades that result in $100 to $1,000. Clear up questions about trade sizing. I'm going to do a coaching lesson on that and post it inside the channel sometime in the next couple of days. Have some honest conversations about focus and not get too literal. We want to be, we want to play around. We want to be playful. We want to look for one kind of type of trade, but we want to be flexible and whatever else. Today, we have a last call, final call for RSVPing for the open office. You've got links inside of Telegram Messenger for your RSVP. Look at robbiebooker.com/hotels. We're going to meet on Thursday and Friday, April 9th and 10th at the Woodlands Resort in the Woodlands, Texas. Here's the schedule. We're going to meet at 9 a.m., sign releases for filming because we are going to film the event. You need to sign a release that says, you can show my face on the screen. If not, I don't know what we're going to do. I don't know, keep you off to the side or something. 9:30 a.m. to 12:30 p.m. We're going to backtest and do conversation. 12:30 p.m. we'll have lunch. 1:30 p.m. to 4 p.m. we'll do more backtesting and conversation. At 4 p.m. we will do a interview with Scott Welsh, and he's going to show us some charts and some things that he does. Make sure you have Telegram Messenger so that we can communicate with you about meeting locations, the recordings. We're going to try to stream this whole thing live also, so if you're at home, you can watch this live, which I think would be really helpful. On the 10th of April, we're going to do a 9 a.m. welcome, and from 9:30 a.m. to 12:30 p.m., we're going to backtest and converse about the strategies that we do. At 12:30 p.m., we will end the formal part of the presentation, but I'll stick around until about 2 to 3 p.m. for Q&A. Remember, make sure you have Telegram Messenger so we can communicate with you about meeting locations and the live stream setup and everything else. All right, the market is so crazy. Just really out of control. So a lot of questions coming in. Marshall, if you have already written to coaching@wrbooker.com with that question about the 800 period simple moving average, that's great. If you have not, send a message in and we will record a video for you. We may even cover it when we meet live. Today, I want to talk about the $9,000 trade. I want to get right into it. The market isn't open yet. I don't really need to look at my open positions. We will be looking at a couple of them, GTE and NLS, that have to go, and NBRV looks great. I may add to that position in order to get my money back. Okay, I want to look at the $9,000 trade. Today I was reading articles on Bloomberg about high yield bonds, and there's a couple different financial instruments. HYXU, this is the International High Yield Corporate Bond ETF, HYXU. Here it is. I'm going to remove the missed pivots because obviously it's definitely messing everything up. You can see there's not a lot of volume here. It's hard to trade this. The reason this is interesting to me is because this fund holds a lot of Italian debt, actually. And I've been looking for a fund that held Italian high interest debt. And this is the one. This is probably going to crash to $24, but there is such a small amount traded every day of this. 22,000 at the most shares a day of this ETF. So it's kind of ridiculous. However, with that said, if you could find shares to borrow, if I could find shares to borrow to short this, I would do it. There's no way in heck that you can buy options on this. There can't be. There's no way it's possible. I bet the spread is just ridiculous. Yeah, the spread is $0 to $5 on these options. So this is not something that we can trade, but I wanted to look at it because I'm always on the hunt for ways to profit from a European debt crisis. I don't want anybody hurt. We give away a lot of the money that I make in my trading account, so it's not like anybody's going to get hurt. So I looked into things a little bit further, and there's also this iShares Trust high yield U.S. corporate bond. So this is U.S. corporate junk debt. And as you could see, this got hammered. I think it had its worst day ever on Monday. But this is another good one to look at. And you could see our setups work on this and junk, the Spider ETF that does the same thing. The setup works. And so what I'd like to do is I would like to propose that as I take money out of some financial instruments that are pure garbage, maybe I put it into something like this. This looks like the beginning of a downward trend where interest rates on, regardless of the coronavirus, that interest rates on junk debt go up. And so this ETF goes up if bond prices go up. And bond prices go up when interest rates go down. Interest rates go down when people are super confident about the ability of zombie companies to pay back their debt. There's a lot of worry now that zombie companies aren't going to be able to pay back their debt. So bond prices fall because the interest rates are rising. That's the inverse relationship that exists. The long version of the short story is that if a bond costs 95 cents, that difference between 95 and 100 is the interest rate, 5%. And as people become super confident in the value of those bonds and the willingness or the ability of those corporations to pay back that debt, the bond price goes up 96, 97, 98 cents. And at 98 cents, there's only a 2% interest rate on that bond now, because that's the difference between 98 and 100. Well, what's happening right now is bond prices are dropping. They're not worth it. Well, why would you buy a junk corporate bond right now? You wouldn't. And so the prices are falling. That means that eventually you get paid more in interest to hold that instrument. You might think, oh, well, that seems completely reasonable. No, it's not reasonable, because the falling prices in those junk bonds means that people don't even think they're going to pay back that debt at all, which is exactly what does happen sometimes. Sometimes the corporate junk bonds go to zero. And then vulture investors come and scoop up those bonds and then get voting rights and all kinds of other types of powers to help restructure the corporation in bankruptcy. The reason I say all of this is because these junk bond ETFs have a long way to go down. This is the 60-minute chart. You look at the 4-hour chart, you could see it fell after really not moving a long way. We almost fell to a double bottom. We didn't quite get there. But we have other lows from 2016. And you can see it can fall a lot farther than it has already fallen. So in other words, I would love to see a bit of a recovery here in this ETF. It's not likely going to happen today. I would love to see a recovery. I would love to see a bearish profit circle. If I see any bearish profit circle, what I want to do is look up HYG. I want to see if we can get a put. Now the volume on HYG is much greater. So it's trading at $81 today. So an $81 put that expires. So the spread on that is just enormous as well. $2.78 to $5.25. It's just that's not a reasonable spread. I wonder if you go out to like April. No, the spreads don't get any better. What about junk? JNK. The July $90 put. The spread on that is ridiculous. So I'm having trouble finding a financial instrument that does this, that I can trade effectively. But the theory holds the same. I think junk bonds are going to underperform in a market that is already underperforming. And I think this has tons of potential to be a pretty great trade. It's 8:30 in the morning, my time. The market is opening. Let's just start running through some financial instruments that we know we like. So UVXY and VXX are up this morning. It's just one day up, one day down. The market's up, the market's down again. You can see the SPY is probably down on the open. It is. It's not down a whole lot though. It's impossible to know. And I get a lot of questions, not just from you folks whom I love. I get a lot of questions from everybody, like what's the trade? Like what do we do now? And the answer is we just follow our setup. Like we just look for trades that have the setup that we look for. And the UVXY and the VXX, they had the setup that we look for, right? They had it. We traded it. We did great on it. And we're going to get another one. I think when we get a bearish profit circle on the VXX, we should buy puts. That's what I think we should do. And I don't really think there's any trade until that time. I'd rather see a bearish profit circle on the 4-hour, but I would take one on the 1-hour. I'd be happy to. I'm going to add an alert. I think I probably already have one. So I'm going to an alert here. And until that happens, I'm not going to do this. Anything else I think would be a violation of every kind of principle that we hold. It wouldn't trading it now, for example, would violate every principle. It wouldn't fall into any category even close to any kind of trade that we take. It would just be speculation that the VIX can't go higher from here. And honestly, I don't think it can go higher from here. I think there's just too much coordinated intervention that will come from central banks. I just don't know what other thing can get into the market today to force the VIX higher and the S&P 500 lower. So that doesn't mean it's a trade though. Just because I think that, I got to see the backup here. I've got to see it. So I don't really have a trade on this yet, but I think one is coming on the UVXY or the VXX, and I'm going to buy puts on this at some point in the very near future. So I still have these call options on home. This is the 60-minute chart. I want the 4-hour chart. So I'm just going to walk through a bunch of charts. I think home of a lot of the different things that I own, it's going to expire worthless, my March 20th options. But the setup is good, and I think the money will come from this. It's a short squeeze. There's insiders buying it. It's oversold. It didn't fall that much in the midst of a general market meltdown. So I really like that. The same goes for TLRD. The insiders own it. It's a short squeeze opportunity. The market got crushed, but TLRD didn't really fall, relatively speaking, the same amount as all those other ones. I think that shows that it's got some legs. DS, on the other hand, doesn't show any of that. It has all those characteristics. It's a insider trade. It's the potential to have a short squeeze, but it's just getting murdered. It's just pure garbage. This got crushed, right? This didn't do well in the midst of a market meltdown. This did poorly in the midst of a market meltdown. BCRX did great in the face of a market meltdown. This is a pharmaceutical stock. I'm going to do a webinar about it on Thursday. We've already talked about this stock. I think they have drugs in the pipeline that are great. I think they have insiders that are buying the stock that are great. I think that there's the technical setup that we look for. And it outperformed in a market that was getting just absolutely crushed. And there's tons of volume, 3 million shares a day. It's awesome. I love this stock. This is the kind of thing that I want to be a part of. NLS. Also the kind of thing I want to be a part of. In the midst of a market meltdown, this held up reasonably well. GTE, not holding up well. This is garbage. This is absolute garbage. I got to get rid of this. Now, it's probably oversold. It's probably going to recover a bit from here. So I might try to let it do that. But this is just garbage. This isn't a good trade. This is a terrible trade. This is exactly what something looks like that's no good. I don't need to look at the chart. I just need to look at the numbers, as you know. But if I look at the chart, it's garbage. On GTE, if I weren't even at my maximum loss, which I am, it would look like garbage, and I would still want to close it. ONTX is another really interesting chart. Look at this. This held up really well in a market meltdown. I mean, that's a pretty fascinating circumstance, right? That's a pretty interesting thing. Here's Tupperware. I wanted to look at this one because we haven't traded it yet, and this is a magic formula investing stock. It's oversold. It's printing bullish divergence on the 4-hour chart. Remember when we went in early on UVXY? I think this is a similar circumstance. I think this is like an early chance on a magic formula investing stock. I don't know what we've got available to us, but I think this is a. Remember we talk about the small $100 to $1,000 trades, the July $2.50 calls. They probably have a really wide spread, so 15 cents to 70 cents. So a bunch of you ask on a regular basis, do we trade the options or do we trade the stock? Well, when the stock is trading for less than $5, the options probably don't have enough volume and the spreads are probably terrible. So I just trade the stock. So I'm super interested in trading 1,000 shares of Tupperware. I'm interested in trading 2,000 shares of Tupperware. I would be interested in buying 5,000 shares of Tupperware. I'm not joking. Like, I would have no problem trading 5,000 shares of Tupperware. If it moves up $1, I would make $5,000. If it moves 20 cents, I would make $1,000. If it moves 10 cents, I'd make a bunch of money too. I think this is a trade that has the potential to make. It has the potential to make $100 to $1,000. So let's talk about trade sizing with Tupperware. I'm just going to do it right on the chart. I'm going to buy this today at some point in time. Look at the 60-minute chart. I love it. I love that candle that's printing right now. I love that it's bullish divergent. I love that. I love a lot of things about this chart. I love that it's a magic formula investing stock. Okay, here we go. So trade sizing. We've talked about trade sizing before. We're going to talk about it again. If I had $1,000 account and it was trading at $2.15 a share, I know I don't want to lose more than $100. So I could trade 100 shares. It would cost me $215. Fell $1, I would lose $100 and I could close that trade. Okay, I'm going to trade 5,000 shares. If I can. Okay. If I had $10,000 in my account, I could trade. I don't want to lose in a $10,000 account more than between $100 and $500 at the very most. If I have a smaller account, I might be willing to risk a little more. But maybe I only want to risk 1%. And I only want to lose $100 at the most. So I trade 100 shares again. Cost me $215 of my capital. And if it fell $1, I would lose $100. Now I could trade. Here's where everybody gets confused. If I traded 1,000 shares, it would cost me $2,150. If it fell $1, I'd lose $1,000 because I traded 1,000 shares. Now, I don't think it's going to fall $1, but just remember, if you trade more shares, you have less room for the stock to fall. That's all. That's all there is to it. You're just trying to give yourself room. And you're like, well, how much room do I need to give it? Well, I don't know how much room you need to give it either. No one really knows. So you give yourself the most amount of room possible. Give yourself, on a $2 stock, give yourself $1 of room. Because we don't even have a stop loss on this. Meaning we don't have an obvious level at which to stop out. There's no obvious previous low that we could pick. I mean, we're in uncharted negative territory here, and we're picking a bottom. So we don't know. So I would give myself, if I could, I'd give myself $1 of room for it to fall. At the least, I'd give myself 20 cents for it to fall. If it falls 20 cents, I lose $1,000. I'm okay with that too. I'm okay with it falling 40 cents and then having a $2,000 loss. Because I'm going to compare it with my targets. I have targets here at $4, $6. I have a really great target at $12. I don't know if it can get to $12. That's a great missed monthly pivot, though, because it never even got close to that missed monthly pivot. The other really good one is at $7.39. Now, if I own 5,000 shares and it rises to $7, I'm going to make $5 for every share that I own, and I own 5,000 shares, so I would make $25,000. I don't think it's going to $7. I think there really have to be something, insane that happens. But we know we like the fundamentals on a magic formula investing stock. I know I like the technicals here enough to take an early entry. It's already printed bullish divergence and a bullish profit circle before. It's probably going to print another one. So I'm staying within the boundaries of what I like to do. I've got bullish divergence. I didn't even have bearish divergence on the VIX. I have bullish divergence here. I have multiple bullish divergences. Now I can pull up, what I'm going to do next here is I'm going to pull up the profit circle layout, and I'm going to see how close we are to printing a profit circle on the VIX. We're not, right? Look, the MACD signal line would have to fall below the zero line. Do you know how far we are from doing that? It's insane. It's going to take forever for that to happen. Even on the 60-minute chart, it's going to take forever. Let's look at Tupperware. How close are we on that? We're way closer. We got really close to moving above the zero line just recently. So we're staying much closer within the boundaries of what we like to do here. Way closer. We're staying true to our general principles, and we're taking an early entry. Sue asked a really good question because you keep taking early entries or whatever. Yeah, sure, but I've got a stop loss, and I do accept that I'm probably going to lose on a number of my early entries. That's okay. At least though we're pretty close to the type of trade we look for here. Is it better if I wait for a bullish profit circle? Yeah, it is. Do I always have that amount of patience? No. So if I know that about myself, we just have to accept that by taking an early entry, at least I have to stay true to the principles. I gotta at least have some divergence, multiple divergences. I've got to have the fundamentals backing up the magic formula investing stuff, those kinds of things. And I've got to be willing to stop out when it doesn't go right. And then I'll just get right back in. I think this is potentially a $9,000 trade. I think potentially it can be the $9,000 trade. Let's look at NBRV. This also held up extraordinarily well in the market crash. It didn't get just completely murdered in the crash that we saw. In fact, it stayed pretty solid through all of that. I love this trade. So I have this trade right now. My friend John Carter and I had a little chat about Beyond Meat. He loves this stock. I don't know anything about it. But I do know that in the midst of a market crash, this didn't do all that badly. And it is a fairly popular company, and it does have a ton of missed pivots above. If that printed a bullish profit circle, I'd probably consider a buy trade on it because we already got 2 bullish profit circles and bullish divergence. If we got another bullish profit circle, I'd probably consider buying this. So here's some other instruments. Look at Club. Did Club do well in the midst of a market meltdown? No, it did not. It did terribly. This is garbage. It didn't hold up. How's gold doing today? Gold's holding up pretty nicely. If it prints a bearish profit circle, I'd be concerned. What about MMLP? Did this hold up in the midst of a market meltdown? No. It's garbage. It's pure garbage. In a market meltdown, if something holds up, that means that in the midst of all the panic, the people who held that stock didn't want to let go of it. Insiders. They're not going to dump a stock just because of a market meltdown. It's where you want to be on their side. What about Veritone? It held up. It held up pretty well too. It's still in its formation. I would add more to this and I would take away from others. I would take away from MLP. This clearly broke the bottom on our setup. Here's HRB. Did HRB hold up? No, it didn't. It didn't. It didn't hold up well. It's a bummer. It's a total bummer. I'm really disappointed in H&R Block. Giantly disappointed. I really thought that this had the potential to move in our favor even in the midst of a financial crisis. People still file their tax returns. This is a magic formula investing stock. It broke the lows on the formation that we had. Super bums me out. It's better than it was a day or two ago. And I'm going to, of all of them, I still think that the fundamentals behind this are better, but I'm just telling myself a story at that point. Here's a Chinese company. The Chinese companies held up really well under the market crash because of manipulation. The People's Bank of China will literally just buy stocks if it has to keep the market up. And that's what it did. It's kind of like insiders buying their own stocks, right? Holds up under pressure. Here's Square. I wanted to sell it. We never got a chance. It would have been a great trade. It would have been absolutely wonderful. So I think the one that I like adding today is Tupperware. I think Tupperware goes to the top of my list anyway. I'm going to put VIX in here too, VXX. I think it goes to the top of my list. I want to watch for that bearish profit circle on the VXX, even if it takes a week or two. Tupperware, I think, is a buy. It's falling today. I think it's trading at a discount. I think there's an early entry here. Then if it prints a bullish profit circle, pile it on. That's my plan for this. S&P 500 is down today. It's down 3% today. So the UVXY is up a bit. I don't really see this as being a panic day. On the days where we panicked, the market opened, the UVXY rocketed upward, and then it just kept going. It's not keeping going. Remember, the UVXY has like a shelf life on a move that's generally 48 to 72 hours, and we've way exceeded that. So every burst higher kind of has a 48-hour window. We're kind of in the window of time where we would generally expect to see this drop back and then continue up if it were going to do that. Usually the UVXY falls. It's in the midst of backwardation now, which means that people are paying more for the front end futures contracts on the VIX than they are on the back ones. Usually, if you buy an option that has more time, if you buy an option that expires in December, you pay more for that option than you do if you buy an option that expires next month. Why? Because you're buying more time. It has more time to go to your profit target. That makes a lot of sense. Something really weird is happening right now with VIX futures. People are paying more for the front ones than they are the back ones. There's so much uncertainty that they're paying more for protection now, and that has caused this. It's, a financial instrument that generally just falls and falls and falls and falls. It's actually rising, not just because of panic in the markets, but it's rising because people are paying more for the front end risk hedge using the VIX as a hedge. Remember, when the market gaps, you can still trade the VIX. So even when they halt trading in the futures market, you can still trade, volatility products, and that's where all the volume goes. So anyway, giant fan of Tupperware right now. I'm going to give it 20 cents to 40 cents of a stop. Giantly hate GTE. I want out of that. That's got to go. I hate Drive Shack. I hate it. It's garbage. I wish I never had it. I'm going to close it. I don't want it anymore. I'm going to make the money back somewhere else. Scott says he brought up the 800 simple moving average in Monday's coaching call. The SPY hit exactly on that day. That's pretty awesome. Alvaro says, what do you mean by spread? So Alvaro, just go here. Go to Google and type in options spreads. Definition. Spread is the difference between the bid and the ask. It's the difference between the buy price and the sell price on an option. So I'm not going to look at, once again, for those of you out there saying, hey, Rob, look at this financial instrument and tell me what you think. I'm not going to do it. Remember, we're just going to look at the setups. So for instance, Ronnie, if it's, I don't know what you're asking me, said, please look at ESNT April 17th, $50 put. I don't know why, but I'm going to look at ESNT and I'm going to say the same thing I would say to every single person every single time. Does it have bullish divergence and a bullish profit circle, or bearish divergence and a bearish profit circle? Or does it have a trend trade that we look for? If not, I really don't have any, like, I don't mean to be like disappointing or anything, but I don't really have any comments. Someone might say, well, for example, Ronnie didn't ask this, but let's say somebody said, should I stay in? Did it reach the target? Did it reach the amount of money that you were expecting to make, or the target on the chart? If yes, then out. If no, then stay. Should I stay in even though it's a loss? Did it reach the maximum loss? Then out. Did it not reach the maximum loss? Well, then look at the chart and say, is this really, really, really looking terrible, and should my money go elsewhere? Is there a better trade somewhere else? But if it hasn't reached the max loss, then it's always okay, I think, to stay in. Those are the general rules. Remember, you can reduce all of trading to the list of things we look for. Did it reach the max loss? If yes, then out after 24 hours. If it's a profitable trade, did it reach the target or the amount of money that I expected to make? If yes, then I'm done. Is it a trade that I should take? Is it printing bullish divergence and bullish profit circles, or really close to printing a bullish profit circle? And it's a counter trend trade with fundamentals that back it up, then great. Is it a trend trade that we look for? Then great. If not, then there's almost nothing to even say about it, right? Pretty interesting. Jeff says, this is why the market's being crazy. The fact of the oncoming collapse itself should not be a surprise, especially when one is reminded of the 1.5 quadrillion of derivatives which have taken over a world economy which generates 80 trillion a year in goods and services. Yeah. Sue says you're going to start Tupperware with a scout trade. See, once again, remember, don't. Once again, I'm going to start it with whatever. But I'm still only going to have a maximum loss. I don't know how many times I'm ever going to say this, but I always mean it in a spirit of love. Rules don't save anybody anything. Like, once again, my rule is I don't want to lose more than $1,000 to $2,000. That's my rule. That's my biggest rule. And if it's a setup or close to a setup, I don't mind taking it. So a scout trade, Sue, could be me taking a $500 loss only and then dumping it. It could be all of those things. I'm never going to be the best example. Well, I'm going to be, I don't know, I am a pretty good example. I'm pretty good. Like, I am. I'm looking for trades that fit our criteria. Yeah. But I'm going to be playful with it. I'm going to say, yeah, listen, I'll go 5,000. I don't mind that. Like, there's some room for me to be a bad guy. I'm not a good person. There is no profit circle. Right. We've talked about it. And I don't care. Like, I'm willing to hop in here and anticipate it like we did with the VIX. I'm willing to do that. And then I'll hop out if it doesn't look good. I'll hop out if it loses $500 or $1,000 or whatever. It's totally fine with me. But it's really close to everything that I look for. So Sue says Beyond Meat has an awesome product. Can't taste it. It's not real meat. I can't wait to try one. Can't wait to try one. National Beverage Corp. A 60-minute chart. Wow, that's a bullish trade, right? Oh, that's a really neat looking chart, isn't it? National Beverage Corp is trading at 44. I'm going to add that to the list. I just pulled up Mark's name. You have a stock symbol, Mark. Beautiful looking chart. I love this chart. I would love to take the money that I would have been spending on GTE or whatever and put it towards something like this. Oh, you can buy Beyond Meat burgers at Target. Awesome. I got to add OMI to the list too. Sorry. So OMI, I'm going to give it until March 13th, I guess is what I said. In the midst of a market collapse, this didn't do great, but it didn't do that badly. Still holding up. It's not making brand new lows. You know, if you look at it from a big perspective, I like it. Oh, yeah, it had earnings and people didn't like it. Sure, I'm fine with that. I'm fine with this one. I like FIZZ. I'm going to look for options on FIZZ. Like a July call. It's trading at $44, so the $45 call. It's a $1.50 spread. It's not a great spread, but it's not bad. Love that. I really like that instrument. That's a pretty great one. Natural gas fund. Yeah, that looks like it might move up a bit. It's hard for me to trade natural gas. It's really hard for me to trade it. I'm going to try by the way everybody, I'm going to try to capture the screen here while we're in the webinar because I've been having some problems doing that um using the clipping tool. Yeah, didn't work. Let's see if I can do it here. It switches the screens around. Fascinating. Okay. Now I know that I can use the snipping tool. Yeah, it would be hard for me to trade natural gas. All right, so just as a review of kind of some things that I'm thinking, I'm going to wait for the UVXY and the VIX to print a bearish profit circle. That could take a while. I really like Tupperware right now. It's a magic formula investing stock. Its fundamentals are good. Um, I don't want to lose more than $1,000 to $2,000. It's an early entry like the VIX was. I have a I have a reasonably good track record on early entries. Actually, it's not a bad one. Um, I really like the setup on FIZZ. I think this is exactly the kind of trade that we do look for. I don't know much about the fundamentals. I'd have to look into that, and we can take a look at that soon. So I love Tupperware. Uh, at home group, I've already lost almost 100% of my option value, so I'm going to hold this all the way through March 20th. You know, there would have to be some kind of a miracle for this to recover before then, so that's going to be a loss. TLRD, not doing what I wish it were doing, but I've got tons of insider buying to support me in that, and I'm going to hold on to that one. Drive Shack, this is going in the garbage can. NLS, going to keep it. It hasn't made new lows. GTE going in the garbage can. Those ones are just terrible. They're just awful. ONTX is really kind of beautiful. If I were not in this now, I might even consider getting in again. It's pretty interesting. NBRV, Insider, all those kinds of good things. Staying up in kind of a disastrous market. Club, not good. Also needs to go in the garbage can. MMLP, not good. Didn't do well. Also needs to go. I need to get rid of these ones that aren't doing well. Just coloring those blue. H&R Block, I'm going to hold on to that. It might need a little bit longer to come through, but I do like it. OMI, still like it a lot. That's holding up pretty well even after earnings and whatnot. Yeah, why don't I like energy? I have never successfully traded uh, um, oil. I've never successfully traded oil stuff. I just seem to call those trends exactly wrong, just terribly. And I think that it's one of those financial instruments that it we just don't understand each other very well. So, I mean, clearly oil is super cheap right now, right? Okay, so let's just look at oil future. That's gold futures. There's oil futures. I just don't know. Like, I mean, I guess I would consider if I could get a setup here, but oil can fall a lot farther. I'd rather be bearish oil. I mean, this looks bearish to me. I'd rather sell it on a bearish profit circle than buy it. Okay, let's take a quick look at the FX market. Ones that I'm most interested in: Euro Canadian. I think that we're getting really close to this falling, so that looks interesting. Aussie Swiss looks like it's about to recover. That's a super giant bottomy looking candle that printed. I would buy this on a bullish profit circle in 1.2 seconds. Australian dollar, Japanese yen, same. Australian dollar, New Zealand dollar, not doing anything that I ever wanted it to do, and I don't know anything about it. Australian dollar looks bullish. That looks like a sweet bottoming out pattern. Canadian dollar is just tied to oil. I just can't even tell you that I have an opinion about it. Whatever I would say about it would be completely wrong. The euro has just been a beast. I would expect the euro Aussie to fall a bit. The euro cat, this has really caused a lot of people a bunch of problems. I have a negative $400 $500 trade on the euro Canadian that we took together. I'm in a sell trade. I'm going to close that out if it makes new highs. Euro Swiss, don't really have any opinion about that. Euro pound, don't really have any opinion about that. Euro yen, I don't have any opinion about those. Pound looks weak. That looks like it printed against the Australian dollar. It looks like the Australian dollar wants to rise from here. That looks like a reversal situation. Bank of England cut interest rates. Hard to be bullish the pound right now. New Zealand seems to have put in a low. Dollar yen, don't have any opinion on that. Yeah, I'll be feeling the FX market again. It's not right now. I have always said this about robot trading and other kinds of FX trading. I don't like it when the market is crazy. I just back off completely, and then I come back to it after the market settles down. I've always done that, and it's just too crazy right now. It will eventually settle down. It looks like I'm going to be buying the Australian dollar when I do go back in. I wonder how Carnival's doing today. They're gonna bail out the cruise lines. They're gonna bail them out. It's the weirdest thing ever, but they're gonna bail them out for sure. They're gonna bail this company out. Kind of weird that they're gonna bail out a cruise line, but it is what it is. Okay, I'll be back tomorrow. I'll let you know inside the Telegram Messenger chat if there are any new trades or things going on.